Hey everybody, this is Buck Joffrey with the weekly Buckshot. So this week I'm going to talk to you about my favorite kind of investing. So what do I mean by that? Well, I'm not talking about my favorite asset class, right? I'm not talking about, whether I like apartment buildings or stocks or commodities or anything like that. What I'm talking about is a very specific strategy that you can use across asset classes. So let me start this by just kind of giving you an example. What if I came to you and I said, I'm going to give you 25% ROI on this particular deal. Does that get you excited? I know a lot of investors get super excited when they hear 25%, 20%, whatever. They hear these high numbers up front and they get excited. But now, what if I said, okay, I'm going to give you 25%, but then I followed up and I didn't tell you this right off the bat, but then you read the paperwork and it says that I was going to give you 25% for 4 years. So what does that mean? It means that you're just getting your money back. So that's not return on investment. That's return of investment. All you're doing is getting your capital back. And you would be amazed at how many times I've seen that, and it just seems to get by people. They get so enamored by the idea of the high upfront return on investment, they forget about the rest of it. Now, what if on the other hand, I came to you and we said, we're going to do a deal together and we're going to put money into this project and we're going to invest in about 3 or 4 years. We're going to pull all of our money off the table and get our capital back. So our return, or our capital is returned. We got a return of capital, but now we're going to keep having returns every year after that until we sell the property. Now that sounds like a better deal, right? What's the ROI on that? Well, ROI typically is, what your return is per year divided by your investment. Well, in this case, what your initial, or your ROI is typically what you initially put in the investment. Let me start. ROI is what you typically get in a year from your yield on your investment divided by your initial capital. Now, what happens when you no longer have what you put in the deal in the equation? It becomes effectively it becomes an infinite return on investment, right? That's what this is. And this is what the most sophisticated investors in the world like to do. Now, that certainly beats the hell out of getting return on capital, right? I mean, infinite return is what I would call sort of the holy grail for sophisticated investors. Well, you can see why. I mean, it's basically free money. The idea here for sophisticated investors is you just basically keep recycling old capital into deal after deal after deal and just create this free money cyclone. And I've seen this done by a lot of sophisticated investors. It's a very, very powerful technique. And if you think this kind of investing isn't possible, just look at my friend Ken McElroy, Rich Dad advisor Ken McElroy, who is a legend in multifamily real estate syndication. Why do you think he's so popular? Well, for one thing, Kenny's a super nice guy, like just incredibly nice guy for the guy of his, stature and popularity and fame, etc. But the other thing that makes people like Kenny so much is that he makes people a lot of money. And you know what? That's his formula. He buys apartment buildings and he buys them and then he does these massive value add plays. And what that means is maybe he takes a building that's not performing well, the rents are low, it's just not, occupancy's low, and then he finds them and then he fixes them up and gets them fully loaded up and he increases rents. And that increases the value of the property. And when he does that, he refinances the money out, and he gives all of his investors their money back, and they end up with what we call infinite return on investment. So it can be done, and it's done on a routine basis. Now, Until fairly recently, there was a fair number of people who would be trying to do that in multifamily real estate. But unfortunately, because of the markets and the way they're so tight right now, the ability for us to find deals in real estate like that, or certainly in multifamily real estate, are not quite as common. I mean, right now there's a lot of really what I call stupid money out there, which is, buying these deals, these C- apartment buildings for capitalization rates of 5. If you don't know what that means, by the way, go and start looking at my weekly wealth widgets on wealthformula.com and learn some of that language. But anyway, listen, infinite return. The good news is infinite return on investment plays like that. They're not limited to real estate. They're not limited to really anything where, you have to look at an asset class that's in sort of a balloon economy like we are now. So let's look at cryptocurrency, for example, right? A lot of people like cryptocurrency. I love cryptocurrency, but you could do the same thing there too. How? Well, say you put in $25,000, you bought Ethereum or Bitcoin, or you traded for some coins, and the next thing you know, you're up to $100,000. Well, a lot of people would get pretty excited about that and just try to keep growing from there. But what if you just initially took that $25,000 initial investment off the table and then you invested into something else? Well, and in that case, what's going to happen is that even if you lost all of the rest of your crypto money, you wouldn't feel all that bad about it because you took your initial risk off the table and you invested somewhere else. On the other hand, if the rest of that money blows up, it's like free money again, right? So again, that's infinite return on investment. Now, another example, just so you know that, again, I'm not just talking about just one thing or another that you can do this, is, a lot of people do some trading, especially accredited investors who are involved in junior mining stocks, which is a highly volatile place to be, and something that I like to do a little bit as well. But in a lot of those kind of private situations, what happens is you invest in a particular company, and then they issue you stock and then an equal amount of what are called warrants. Now, warrants are basically these options to buy company stock at a fixed price. So what a lot of people do is, now the stock goes, when the stock goes public, they wait until they make a profit on the stocks that they paid for, pull that off the table, and then let the warrants sit out there as free money. Right? So if suddenly they just blow up, again, free money. So you can do this all over the place. Do this enough times in various markets, various asset classes, and you can create a lot of free money for yourself without a significant amount of initial capital investment. I mean, I think this is something that you really, really should think about deeply. Now, I often talk about this concept of velocity as one of the keys to building financial wealth. And what do I mean by velocity? It's just all that velocity is turning your investments over and over and over and redeploying that capital. That's all velocity is. The quicker that you can get that going, the more money you're going to make. Well, free trading, like we just talked about, or infinite return on investment, it's basically velocity on steroids, right? And that's why this is the favorite investing strategy of the ultra wealthy. Anyway, you should try it. That's it for me this week on the weekly Buckshot. I'll see you next week.